Today we have Symon He with us, and he's here to talk with us about short-term rentals. Him and his partner James focus on teaching people how to manage short-term rentals of their own, investing in short-term rentals, and managing them for others as well. So thanks for being on the show, Symon.
Happy to join you guys.
Yeah, thanks, Symon. So Symon is, like Rob said, he's the founder of Learn Airbnb. It's the #1 Airbnb hosting education blog online, and he's the main content contributor there. And he's coached thousands of Airbnb hosts around the world, from those who are just starting out, as well as to those who have grown to 500 plus listings as well. So he's got a lot of expertise around this subject. And Sam's also studied the actual performance data of over 420,000 Airbnb listings from over 250,000 hosts worldwide, taking the best evidence-based learnings to help new hosts win from day one. And Symon's also a best-selling online instructor, and he's taught over 150,000 students from around the world. And so, again, very happy to have Symon on the show here. And anything else to add to that bio?
No, I think that's good.
Symon, you guys are Toronto based, right? But you're not in Toronto, are you?
I'm not. Yeah, my partner James is out of Toronto right now, but he travels quite a bit. I'm mostly based out of Los Angeles.
That's nice. That must be nice. Are you Canadian? Or are you?
No, I am not actually. I'm a Los Angeles native almost. I was born in China, but then I grew up in LA pretty much all my life.
So too bad James couldn't be here with us, but how did the two of you meet each other?
Yeah, so the interesting thing was I got started with hosting and creating Learn Airbnb before James. Actually, I was with a group of friends. We were in LA back in the early days, looking at 2012, 2013, very, very early days for Airbnb at the time. Totally different space than it is today. We got started, made a whole bunch of mistakes, and ultimately I had a lot of notes. We sort of had a lot of learnings from our own experience there and operating in downtown LA. And so I decided to put all our learnings on a blog and see what happened. Started to get some attention and started to grow. James, actually, he started hosting after discovering our blog. He was kind of at a stage in his life where he was working on a startup, and I think it was a watch startup. He had put a lot of money in it. It didn't work out. He kind of lost money with that thing. So he was looking for a way to start making some money at the time, and he was looking for an option. And then he found, our blog. He thought, hey, I could do this. He tried it out, and then he actually took our model and took it to a whole new level. I mean, he went from just starting out to getting to just over close to I think it was just a little over 40 listings within a little over a year's time. So he went through a massive growth. Then he reached out, and then we started to work together because he had a very different perspective on the hosting experience. And we thought we could share something with the rest of our audience around the world to help them become better hosts.
So when you say 50 listings, what do you mean by that?
So 40 for him. So basically it is a combination of listings that he operated himself, where he had complete control over. Either he was leasing it through like a rental arbitrage setup where you rent on a long-term basis and then you short-term rent with the approval of the property owner or the landlord. And the other part of it, which is basically operating as a listing manager, you sort of co-hosting the listing for a property owner. And that's actually a model that has lower risks for a host because you don't need to sign a long-term contract.
Sure.
You don't need to go and furnish it. The property owner provides essentially the property and just provides it ready for hosting, right? And then you take over creating the listing, getting it up and running, communicating with all of the guests, coordinating with all the cleaners and essentially the whole operations. And then taking a fee as a percentage of the gross bookings.
Okay. And that's pretty time consuming, is it not?
It can be. It used to be much more time consuming. And I say that used to be because back in the early days, what set hosts apart were sort of the much more personal touch at the time. I would say the early users of the Airbnb platform, the early travelers, really wanted that more human interaction, the in-person check-ins. But now there's a much larger segment. I would say even more so than the segment that wanted the personal touches. Now there's a larger group that really just wants a consistent experience, and they don't want in-person check-ins. Now there's a lot more tools to automate. People are using smart locks or lock boxes to essentially do remote check-ins and checkouts. In fact, during the latter, after about less than a year, essentially James was operating all of his listings remotely while he was traveling. So you can build the systems to actually remotely manage your listings.
Oh, okay, well, that's interesting. We'll probably dive more into that in a little bit, but let's dial it back here and let's talk about how you got started in real estate investing in the first place.
Yeah, so my first experience with real estate investing was right out of business school. I was getting my MBA at Stanford at the time. And if people don't know about sort of the Bay Area, you're sort of deep in the jungles of the Silicon Valley, and everybody, is working on startups. So in my MBA experience there in the first year, I was working with a startup. It didn't work out. And then I wanted to work on something that I felt was a little bit more tangible. And I landed on real estate. I was like, well, that's very tangible. It's something I could put my hand on. I could see it. So that's how I initially got into real estate. I ended up joining a private equity group there, working with them for a few years. Ultimately, we were helping our clients invest in sort of the lower mid-tier in terms of deal sizes across a wide spectrum of commercial assets, mostly along the West Coast.
Okay. So what does your portfolio look like now?
Portfolio now is primarily single unit rentals in California, Nevada, a little bit of Arizona near Phoenix, as well as multifamily, mostly through partnerships.
Gotcha. Okay. So what would let's go back to the short-term rentals then. What would you say are some of the biggest challenges around the Airbnb short-term rentals?
Yeah, it really, it's different for different stages and different types of hosts. Okay, so if you can think of if we categorize the hosts in several different groups, we have the hosts that are trying to host with their own space. Maybe they're, owner occupiers or tenants in a space, and they got an extra room that they like to make an extra buck in. Their challenges are different from somebody who wants to run it professionally and wants to have grow a portfolio and manage other properties on behalf of property owners, right? Now, for the first group, their biggest challenge really, I think, is having the right expectations. The biggest thing that we see with a lot of folks that are getting into or just thinking about hosting is that they don't recognize that the profit potential of what they can actually make hosting on Airbnb is largely determined by the location and the nature and type of listing that they have, right? A lot of them may have seen stories online about somebody making, six figures or multi-six figures being a host, and they sort of have this picture in their head that might be possible for them. But, somebody running a penthouse listing in New York City, which not legal now, but is gonna make a lot more than a host who has a listing outside of a major city in the middle of nowhere, right? Mm-hmm. So really just understanding where they're located and then identifying what their competitive set is to set the right expectations. That I think is the major challenge for the hosts in that category. Now, the other category, the professional hosts, their biggest challenge is two-part. They have two big challenges. One is building the systems that allow them to scale and add more listings under their portfolio without scaling their time linearly. So they have to be able to build the systems that allow them to scale in that way. And the second part is the pipeline. It's a pipeline of looking for property owners that have properties in core Airbnb hotspots, where there's strong short-term rental demand for travelers, that also just doesn't want to manage it themselves, right? So that part is starting to grow. That segment is starting to grow. Before, these owners, they sort of have this conception that it's very easy to do it themselves. And then when they try to do it themselves, they realize, hey, unless I start hiring out and outsourcing the cleaning and the listing management, it's very time consuming. If you want to manage it yourself, it's super time consuming. So as they start to understand and think about sort of their return on their time invested in the hosting process, rather than maximizing the profits for the unit level, that's the sort of the property owners that would make a lot of sense for the professional host to target.
So let's dig into both of those then. The first thing you said is the big challenge is around like them identifying a good property. So let's talk about how someone would do that.
The easiest way is to find where the listings are already doing well, right? You find the pockets by looking at the existing performance of listings. And, the best resource that we recommend now is getting a report through AirDNA, AIR, and then DNA.co. And they have the most up-to-date, and as far as we know, the largest third-party data set that's available today for hosts, for property managers, for people that are aspiring to become a professional host, but even just anybody that wants to know what the market potential is in their area. Their reports, I think, depending on what city and kind of the you're in, it ranges from about $50 to $150, but you get this report that essentially covers hundreds or thousands of listings in your specific area, and they give you all of the performance. So you understand exactly what the occupancies are, exactly what the nightly rates are by the property types. You get to understand things like whether there's seasonality in your market. Some markets are pretty even in terms of the demand throughout the year. So, you can get a pretty good idea and expectation about the bookings revenue to stay pretty consistent. But some parts where you have very extreme differences between high season and low season, right? So that means, for that helps set expectations, but also informs your operations. You're going to have to make sure your scheduling and especially the way you're pricing your unit during those different parts of the season matches the demand levels.
Would you say that if I was to look at that and then find something maybe 3 blocks away, I could have a drastically different outcome?
Absolutely. And I'll give you an example. There's a group that I was working with before. They were also working out of downtown LA, and they had a listing that was basically right across the street from the LA Convention Center. So you can imagine LA Convention Center, there's an event every weekend, right? So their traffic is very consistent. And that's also walking distance to the Staples Center. And then they thought, wow, this is great. Let's try to find some more right around here. So they found another almost identical listing. They took it under contract, but it was 3 blocks away, just 3 blocks. I mean, it was like a 1.5-minute walk, right? Mm-hmm. And it had 40% lower occupancy. I mean, it ended up making 60% less because it didn't charge as much and it wasn't filled up as often. And it was only 3 blocks away. It just, people don't, when they look at that area, they know exactly where they want to stay. And even as little as 3 blocks could make a big difference, right? So short-term rentals can be hyper localized in that way. But some other markets, that's not the case. You can be 5 miles away and sort of be the same thing, right? It's kind of spread out and there isn't a very central draw for the demand that that is the only draw and everybody wants to just stay within walking distance. If that's not the case, then it sort of doesn't have that kind of scenario, but it can, especially in sort of very urban, very dense downtown type of markets.
That's funny. I would never imagine that that would be the case. I was thinking more like sort of 3 blocks away can actually be significantly further away from whatever the draw is to the area, not that something only a minute and a half down the street would have that drastic of a difference.
Yeah, we were completely surprised by the results.
So what does that look like in a professional? Can you go through a little bit on exactly what that professional, I don't know what the term was, a professional short-term rental,
short-term rental host.
What are they doing exactly? What are they doing typically? Maybe what kind of money are they even making on that type of scenario?
So, I guess I'll take a step back and provide some insight into the earnings expectations. Okay, so there's 2 data points right now that we're pretty confident in. One was the very large data set that we studied a few years back. It's a little bit dated, but at that time, we found that out of basically looking at 6 million transactions, right, across 430,000 listings, the median bookings revenue for a listing at that time was just around $3,300. That meant 50% of the listings earned less than that in the year, total bookings. Okay, so and the average was under 10,000. Now there was a more recent data set that came from Earnest as a private lending platform, and they did a survey of tens of thousands of their clients, and many of them are using it for short-term rentals. And what they found also was that the short-term rental hosts there were on average now earning about just under 12,000, but then the median was like around 5,000. Okay, so it's improved a little bit over the last few years, but really it's much lower than what a lot of people would expect, right? When you see something like that where the average is significantly higher than the median, it means the vast majority of 2/3 are earning less than the average, right? So most hosts on the platform will earn less than $1,000 in monthly bookings. That's not factoring in operating expenses and costs. So most hosts are going to earn, a few $100 in terms of profit, right? Now, but this is factoring in the large majority of hosts who are just, they're just hosting their own space. They don't get to choose where their location is. They already have the space and they have the room, and the listing is set, right? And their earnings potential is determined by their location there. But
and also, I would say if you're going across 400 markets, you're going to have each one's going to be drastically different in and of itself.
Absolutely. Yeah, there are very big differences. There are very, very big differences. But if for a professional host, right, if you're anywhere near a major metro, what that means is that, with the market data available, if you look at the data that's available from the report from AirDNA for your market, you can pinpoint the spots that make the most sense, right? Especially if you have the option to either do a rental arbitrage or find owners that have properties in those pockets and then become the listing manager for those units. Since you're taking a percentage of the bookings, you might as well identify and target the properties that have the highest potential in terms of bookings revenue.
And you're saying act as a property manager, essentially, just right? That's what you're.
Yeah, because that's to grow your portfolio and as a professional host to get the best return on your time. That makes the most risk adjusted move for you, because one, you don't need to take anything under contract. You're not going to be fronting the cost to furnish, and essentially the homeowner is taking on all of the market risk. You're taking a percentage of the top line, so you eliminate a lot of that risk.
Mm-hmm. But essentially, we're not investors at that point. We've just got another job.
Well, you can still implement the rental arbitrage opportunity there, right? If you use the rental arbitrage opportunity, then you can. So I'll give you an example. In the same markets. So let's say like I'm just going to use LA because I'm familiar with the markets here. In downtown LA, you can buy a 1-bedroom condo here. On the low end, maybe about 400,000. On the higher end, you're going to go to 600,000-700,000 in the downtown areas. Okay, your long-term rental rates for a 1-bedroom in that area, it's about 1,800 to 2,500 ish. That's the most of the rent's going to be in that. So what is your yield, right? On, let's say you're putting 30% down, 25% down, even on say 400,000. Okay, let's just say you got to put 100 grand down, right? So you look at the return there versus, let's say you have it on a lease instead of buying it, right? The lease to secure it is you got 2 months of security deposit, and then you give yourself another month or two to ramp up. So you're really looking at just, even with furnishing, you're looking at less than 10 grand to get it all up and running. But now your revenue potential from the short-term revenue potential in that area, you're looking at 3x the long-term lease rates, minimum in a good spot. You might be able to get to 4x, but let's say 3x. So you're putting in 1/10 the risk capital, but you're also getting 3x the revenue potential. Now your operating expenses are a little bit higher because you got to factor in the cleaning and all that stuff. But essentially your yield on what you got to put in equity wise, you're getting 5 to 10x compared to actually buying the asset here.
How many, for your students and people, how many listings could somebody realistically take on, or what are some of the numbers you've seen people doing?
On a rental arbitrage basis, we're really looking at anywhere from about half a dozen to maybe 20 or 30. Not more than that not that much more than that if you're kind of using the rental arbitrage scenario, just because it's hard. It's still tough to get those agreements. Okay, it's starting to get easier now. The landlords and property owners are starting to understand the space and a little bit less shy about it. I'll just give you an idea. One of the groups that was doing that exclusively, their hit ratio, success ratio, going out to all the properties and is about maybe 5%. They got to talk to 20 to get one to say yes to give them a try, right? And usually what they have, the method that works better, instead of saying, hey, we'll take it for 12 months and then you let us do it short-term rentals for 12 months. That doesn't work as well compared to say, hey, we'll take it on a month to month, we'll pay you 15% above your market rates. And we have a mutual out, 30-day mutual out. You can kick us out if if it's an issue with your other tenants or things like that. But we can get out also, right? So it's kind of a win-win because the property owner is not stuck with a tenant that might be causing issues where they have agreed to let them do short-term rentals. But then also the host, we call him the rentrepreneur, also isn't at risk of having a 12-month lease that, maybe they picked the wrong location and it's not able to generate the profits on a short-term basis to more than cover that.
And so let's talk about scaling then. So how would somebody scale so that they could deal with that many listings?
So if you want to scale, the best way to scale is to pick the pockets, the Airbnb pockets that you want to operate out of, and try to get as many build your portfolio within that pocket. And that's even easier. It's even better if you could put them in the same building, because then, so I'll give you an example. There's one host that had 8 units all across town. If you think about 8 units across LA and trying to manage that, even if you have cleaners scheduled everywhere, things happen as you scale. There's going to be cleaners that get in a car accident, and all of a sudden you don't have a backup. You got to go halfway across town to bridge that gap. You got a 3-hour window to turn this 2-bedroom listing around. It's going to be pretty tough, right? But if they're all kind of all in the same unit, it becomes much easier for you to manage those kind of scenarios.
That's interesting.
Yeah, driving
Okay.
across LA is worse than we have a lot of listeners in Toronto. Toronto's pretty bad. LA, I've been there. It's probably 3 times worse.
Is
Yeah,
it
it's
really?
impossible.
I find that hard to believe, man, because I
It's
can't
worse.
I can't get anywhere around here. It drives me bonkers.
No, LA's worse.
Yeah.
LA's worse.
Well, I was talking to actually Patrick, who was our last interview, and he was telling me, because he's everywhere all the time, he said he thinks Toronto's the worst in the world.
Huh?
Yeah.
No,
Toronto's rough. I
can't be
think
as bad as LA here on the west side.
Jeez.
Yeah.
LA just doesn't have any times where it's done. Like, it's just always, right? 24/7. Toronto, I think we have a little bit of little pockets here and there where we can jump across quickly, but
You can take the 407 when
It's bad enough
like
here.
at certain times, and that's about it.
Like it
Yeah.
takes
Anyway,
2 hours to go 15 miles during in the wrong places. It could take you 2 hours to go 15 miles.
you may as well watch a game, a basketball game, and then and then try to get out.
Well, why don't you, because you do have some trainings and everything around this. I mean, why don't we talk about that a little bit and what you offer some students to help them jump into this business? I think the cool thing about this business is that it's, in my mind, it's a really good it's a really good business to start out. I think there's some scalability there, and you can also, for someone who maybe doesn't know a whole lot about real estate yet, it's probably a good way to jump in without having to put up too much capital, or maybe hardly any capital in some cases, and start to learn how the markets are working and all that sort of thing, right?
Yeah, if for a lot of folks who are just starting out, short-term rentals is a great place to start. One, it requires a lot less capital. The model is much easier to understand. Also, you can get started very quickly, and you don't even need to have a property. You don't need to have your own property. And as part of one of our training programs, we even cover a module where you don't even need any property, right? One of the amazing things about Airbnb as it's growing is that it's not just a short-term rental platform anymore. It's really about travel experience. And one of the biggest untapped opportunities on the platform right now is Airbnb experiences. And, we've really started to dig deep into that on, what experiences do well, how to craft and design your own experiences, and be able to build an Airbnb business that can help you generate a lot of cash flow, even if you don't have any properties, and even if you're not managing anyone else's properties. So that's one of the things that works. So one message I would love to tell your listeners is, as they're exploring programs in short-term rentals, even just real estate programs, right? The one thing that is very helpful to keep in mind is that there are a lot of different investment strategies, different frameworks, and different models to follow, right? One of the things that we do through our platform is that's different is that we're not just saying, hey, here's what we did that worked in this market for these listings that we had. That's not what we're doing. What we're saying is, like, we did that, it worked, but here's what our thousands of other hosts that we've talked to and surveyed. And then we also analyze the actual bookings data, the real transactions for hundreds of thousands of listings to find out what actually works in different places. Because what will work for one person in one market for their property might not work for you, for your property in your market, right? So we provide the tools and the methodologies for anybody who's just starting out to be able to understand that, to see, hey, for me in my situation, in my market, what makes the most sense for me to do?
Okay. I like it. So tell us a bit about your program.
So our program, we have a long and very detailed free training that walks through a lot of really valuable information for people that are just curious, and we'll provide a link for you guys to share in the show notes. They can check that out. If they find that helpful and useful, in that training, we will also talk about a more detailed program that essentially handholds someone from knowing nothing to being inactive, profitable hosts, within a couple months. Now, we've trained folks that have been fresh out of school that knew nothing about the space, as well as grandmothers who had no idea what Airbnb was, but they suddenly had the time and the space to do something interesting. And we've helped them become superhosts within 3 months.
Okay, so we're going to have what's the program called anyways? At least
It's called Hosting Accelerator.
Hosting Accelerator. Okay. And you're going to share a link. So that'll be in the show notes, everybody, if you want to learn more about this program.
So what is the best way to get to that? What's the link? Is it?
Yeah, I'll give you guys a link, and it's a link where they can sign up for a free webinar training.
Okay.
Yep.
So if you're listening and you're driving or you're working out or something and you're not able to do it, just pull over maybe, or just check it out after you're done and read the show notes there. You'll be able to grab the link to that. And if you're on our website, you can check it out at the bottom of the page as well with the link.
All right. So, and I guess the main key point of this is, unfortunately, James couldn't be here with us. We set up this interview. He was sort of your Toronto liaison. I guess you work quite closely with him. Is that?
Yeah. Yes. James, he was operating the top, pretty much the top 1% and many top 3 and top 5% listings in Toronto. So yeah, he really knows the market well. And he knows what it takes to turn a listing from just starting out and getting it to the top.
And so he's one of your trainers in the program. Is that right?
Yes. Yeah. We co-trained the students together. Yeah.
Beautiful. Okay. Cool. So, well, thanks again for being here. Really appreciate all of this stuff. This is sort of something that we've certainly never heard that strategy before anyways. I mean, I know of it, but we've never really talked about it on the show. It's an interesting one, where, leasing and then I guess subleasing, right, with permission. So that's really, really interesting. Something almost like a wholesale where you're starting off with, just your ingenuity is all you really need.
Yeah. So I'm glad you brought that up. I got one more point to share, which is, in the program, actually, we have a whole module that is specifically geared towards folks that are coming from a more traditional real estate background. And essentially, we're going to show you how do you compare a short-term rental opportunity with a traditional rental in a particular market, right? And this is looking at it from an investor's perspective, where you're hiring a listing manager or somebody to host on your behalf, and factor in all of those costs. How do you compare that with a traditional rental, and where and when does that make sense?
Great. So lots of stuff to learn for anybody that's interested.
Yeah.
Okay, so thanks for being here with us. Again, we're going to have all your contact info. Did you want to leave another contact info for anybody? Do you have
No, that'll be it. Just check out Learn. We're actually doing a rebrand. It was learnairbnb.com, but it's going to be forwarded to learnbnb.com. We're expanding the scope of what we're going to be covering.
Okay, learnbnb.com.
Yeah.
Pretty easy. Okay. Sandy, how can people get in touch with you?
Yeah, info@mckayrealesnetwork.com or 289-389-6846.
You can just reach me at rob@mrbreakthrough.ca. Okay, thanks everyone for listening, and we'll see you next time.
Thanks, everyone.